Hello and welcome. This is Business Edge right here on News Central. I'm Tolulope, Adeleru, Balogun. First, the headlines. Nigeria records 14.23% inflation rate for October 2020. And Zimbabweans mend old dollar notes amid economic crisis. We'll have the details of these stories and, of course, NC4 to watch as we wrap things up. Please stay with us. Now we start in Nigeria, where the country's inflation rate has increased to 14.23% year on year in October 2020 from 13.71% recorded in September 2020. Nigeria's National Bureau of Statistics announced the rise in its most recent Consumer Price Index report released on Monday. On a month-on-month basis, the headline index increased by 1.54 percent in October 2020. This is a 0.06% rate higher than the rate recorded in September 2020, which was 1.48%. The composite food index, a closely watched index, is now 17.38% in October of 2020, compared to 16.66% recorded in September 2020. The category, all items less farm produce or core inflation, which excludes the prices of volatile agricultural produce, stood at 11.14% in October 2020, up by 0.56% when compared with 10.58% recorded in September 2020. Meanwhile, the rise in the food index was caused by increases recorded in the prices of bread, cereals, potatoes, yam, and other tubers, meat, fish, fruits, vegetable, alcoholic, and food beverages, as well as oils and fats. To break down what this means for the Nigerian economy, I have Nnamdi Nwizu. He is the co-managing partner, executive director, and the head of trading at Comercio Partners Limited. Nnamdi, thank you so much for joining me.
My pleasure.
So by these numbers and by these statistics that we're seeing from the National Bureau of Statistics in Nigeria, and many people have said this is a downward trajectory that the country has been on for a number of months now. Again, 30 months running, we're seeing this inflation continue to rise. Is Nigeria in a recession, heading to a recession, or has been in a recession for a number of months now?
Well, the GDP figures show that we're basically more or less in a recession right now. Looking at the inflation figures, we can see very clearly that I think we've had a situation where the monetary policy authorities have decided to focus more on growth and trying to boost the economy or kickstart the economy and GDP versus trying to manage inflationary pressures. So we've seen the devaluation of the currency continue to contribute to this. The NSAS protest also helped because it more or less destroyed a lot of the value chain that we have along delivery and core products from, for instance, look at cement. You hear that Dangote had quite a number of trucks that got burnt. Actually, that have affected the price of cement, as an example. We have our borders still closed.
Yes.
Increasing the cost of imported items coming in by road. And then you have inflation due to two reasons. One is the cost push from increased cost of manufacturing, and then you have the demand pull, which is basically based on the fact that you have excess liquidity in the system, interest rates are extremely low, and there's really no incentive for people to save. When you have a one-year treasury bill closing at 0.3%, the question would be, why would I save my money and what I spend it on items than trying to consider even saving at all, based on the fact that central bank's focus right now seems to be more of economic growth.
Okay, so we're looking at a 30-month high that the Nigerian inflation rate has climbed to. Food inflation is one of the big issues on this, and we've heard reports that anywhere from about 50 to the majority of Nigerians spend anywhere about 50 to 60% of their income on food, if not more. So the cost of food in Nigeria is absolutely astronomical. The land borders are shut, which a lot of food and food items have come through, and you mentioned that as well. But looking at food inflation, what does that tell you about the economy as to where we currently stand? We're seeing high levels of insecurity in what is known as Nigeria's food basket. So many people are anticipating into the early months of next year and into mid next year that this is going to be worse because farmers have not been able to go to farm. They have not been able to harvest because of the insecurity there. So we're just seeming to scratch the surface of what is going to be a very long road. The food inflation, what do you think it says about the state of Nigeria's economy currently?
Well, we all know that there's a popular saying that a hungry man's an angry man, and we saw that during the NSAS protest where a lot of people came out, they're destroying things, a sign of the frustration that you have basically in the country and in the economy. It's instructive to say that with the way things are going, what are we going to see even the civil servants come out very soon to clamor for another salary increase, right, for the civil servants based on the fact of cost of living seems to be shooting up, skyrocketing all over again. So it tells that things are pretty tough. Some of the, we also haven't seen the benefits of some of the policies being implemented by government. So for an example, using rice as an example, prior to closure of the borders and trying to grow rice locally, we've seen the price of rice go up from 12,000 to about 32 or 33,000 naira per bag or thereabout for local rice. So you have to compare that with how much you are paying for imported rice prior to the lockdown of the borders. So while we are trying to, it's good to try and encourage the local manufacturers, one also has to understand the fact that local production struggles to meet up to demand. In terms of cost, yes, to meet up with demand. Efficiency is a big problem. So you ask yourself, why is it that someone can grow rice in, say, Thailand, package rice, put it on a ship, pay cost of shipping down to Nigeria, pay duty at the ports, and it ends up being cheaper than locally manufactured rice.
Very big.
Because you have a lot of inefficiencies in the system. So when you try to promote local products that were not set up to produce efficiently, somebody has to pay. So yes, rice production, for instance, grows. Yes, you have a lot more people employed in that sector, but you have the common man on the streets having to pay a lot more for these products.
Okay, and it's interesting you mentioned rice. I want to add a few more staples that are very common to many Nigerians. A 50 kg bag of Ijebu Gari that sold for about 7,200 naira in May 2019 now costs about 13,700 naira. A 25-liter keg of vegetable oil, which sold for just under 10,000 naira in May 2019, is now 14,625. Averagely, again, depending on where. And then a piece of frozen fish, which cost about 417 naira in May 2019, is now well over 600 naira. And so you have these common things that many Nigerians are just using to survive have grown astronomically. So let's talk about some of the borrowing that we've seen Nigeria's governments get involved in. They said they're borrowing for infrastructural developments, for projects that have been lingering through previous administrations. They're borrowing to finance. We saw money for palliatives. We saw palliatives during the coronavirus lockdown. But in all of this, when you look at where the country stands in terms of inflation now and where we stand with the amount of money we're borrowing, is this the right path to take? And is this path going to yield the necessary results?
So borrowing isn't a bad thing. If you look at a lot of the developed economies, you see their GDP to their debt to GDP ratios. Some of them are 80, 90, 100%. Like Nigeria, which would be, I think, in the late 20s or thereabouts, right? So borrowing isn't such a bad thing. The major thing is, what do you do with the funds that you borrow? So when a lot of the money goes towards inflated projects, right, then you realize that you're borrowing more or less for some people to put the money in their personal pockets.
Yeah.
Then once again, we also have to look at how viable some of these projects are. So if you have a rail line running, that will ensure that you have commercial transactions going on and will help support, commercial activity, it makes sense. If you have a rail line that runs to practically nowhere, then it becomes a bit of a problem because you borrowed to build that rail line. You're not running it effectively. It doesn't really lead to anywhere, or government decides to subsidize the cost of tickets. So you borrowed money for the rail, you're subsidizing the cost of tickets for people to use the rail, which means you're struggling to cover the cost of building the rail. Then you're just going to end up spending more and more money servicing this debt without actually achieving a lot of things. But yes, we've seen government try to focus on infrastructure, but the question we need to keep asking is, what has been done with the funds that have been borrowed? Have they been effectively utilized?
Let's pause here, and I want you to think of this question and have just the answer for me when we come back. Two answers. What does Nigeria's government need to do? It's a policy situation, it's economic, it's regulatory, it's so many things, it's political. Two answers to what Nigeria's government needs to do to reverse this 30-month trend. And for Nigeria's food inflation, it's risen over the past 5 years, 110.5%. So think about that. When we come back on Business Edge, Nnamdi will still be with me, but we'll also be getting into conversations about yet another economy on the continent, unfortunately, that is struggling, and that is Zimbabwe. Zimbabweans are mending, putting back together old, torn dollar notes amid the country's economic crisis. The details after this. This is still Business Edge on News Central. I still have with me Nnamdi Nwizu. He's the co-managing partner, executive director, and head of trading at Comercio Partners Limited. So before we get into Zimbabwe, Nnamdi, before we went for that break, I asked you very quickly two things you think are priority for Nigeria's government to reverse this inflation trend. 30-month high hits now. Food inflation has just continued to rise over the past 5 years, 110.5% higher than it was 5 years ago. Two things that you think quickly Nigeria's government needs to do to slow this, stop it, reverse it.
So for me, one, central bank needs to start to look at the monetary policy objectives and try and figure out how to reduce money circulation, and secondly, what they need to do with regards to the currency to try and stabilize the currency. So that is from a monetary policy perspective. The second would be from the perspective of the government. So I think we need to look at infrastructure and say, what do we need to provide and what goods or what items do we need to focus on as a country, because we really can't do everything. And let's try and sort that out and ensure that we create the enabling environment that will allow people manufacture and produce. If for some reason the environment isn't conducive for certain products, then you allow your borders open up and allow people import. Because the truth about it is, you can't be an island, right? So you can't shut down and try and produce everything. You need to let some things come in and end up ensuring that you focus on the places where you are most efficient and where you get the best value.
All right. So let's move now to Zimbabwe. Worn out, torn, or even shredded by rats, $1 notes are now sought after in Zimbabwe as the economic crisis lingers. Crisp new notes are not coming into the country, so enterprising traders are repairing old ones for desperate customers. But formal businesses are rejecting such notes, forcing people to sell them to traders in the informal sector for a fraction of their original value. Informal street markets will usually, with some negotiation, accept the glue patch notes. Zimbabwe's booming informal economy employs about 2/3 of the population, and this is according to the International Monetary Fund. So there are a lot of dirty dollars in circulation. The US dollar has dominated transactions in Zimbabwe since the country's hyperinflation soared to more than 5 billion% and forced the government to abandon the local currency in 2009. Last year, the government reintroduced a Zimbabwe currency and banned foreign currencies for local transactions. Few took heed, and the black market has thrived while the local currency quickly devalued. In March this year, the government relented and banned the dollar. Now, shortages of small denominations of the dollar are a nightmare. And Nnamdi, when you first heard this story that things are so bad in Zimbabwe that people are gluing together old dollar notes and selling them for a fraction of their value in order to get some kind of currency in their hands to buy food, to buy medicines, did we ever think that Zimbabwe's economic situation would ever get to this level?
Well, honestly, I think things have even improved a bit in Zimbabwe compared to where it was years back. I mean, you mentioned it, 5 billion % hyperinflation. Just imagine what that means with regards to cost of bread. I want to have this saying that by the time you even ask someone for the price of bread and they turn around at the counter to bring the bread from the shelf and turn around, maybe the price would even have gone up considering the 5 billion % inflation figure. So basically, I mean, a bit of history has been economic sanctions haven't slash mismanagement of the economy by the rulers, right, have basically led to a tattered economy. We have the situation where to try and stem the hyperinflation, they basically moved to US dollars, right? Because people are basically losing faith in the economy. When you have a billion Zimbabwean dollar notes, it tells you how bad things have gotten, right? And maybe that would buy you a packet of biscuit or something. So people moved from holding Zimbabwean dollars and started transacting in US dollars, because the actual truth is what was happening was the currency was devaluing. So it's not as if the cost of goods were actually moving up per se, but the currency kept on devaluing. So people got tired of holding a devaluing currency and started to transact in US dollars, which naturally was more stable. This worked for a while, and then you had the Zimbabwean government come in and try to change that. So they banned using US dollars for transactions and tried to get people to go back to using Zimbabwean dollars. But that just created a crisis because people have a total lack of faith in their Zimbabwean currency, right?
Yeah.
Zimbabwean dollar. So what has happened now is people have moved back to using US dollars for transactions. However, the challenge you have is finding small dollar notes. So yes, you can find the $100 notes or the $20 notes, but to get the $1 notes has become a bit of an issue. Because in the US, what would happen is when they have old notes, the old notes will be moved back to the central bank, that would now issue fresh notes. But for Zimbabwe, that means they would need to take the old notes, fly them from Zimbabwe back to the US, because the US, they're the ones who will print dollars. So they will have to take them back to exchange them and bring them in. The cost is too high.
Okay,
so what you see.
Okay, sorry, I apologize for interrupting you, but let's look at solutions as well. The government has tried many formulas. We talked about stopping the currency, stopping the usage of the U.S. currency, eventually them having to relent. They brought in the RTGS dollar as well, trying to get electronic payments, whatever they could. What formula, what can work? Because this is not the first time that Zimbabwe has hit these unfortunately historic and almost unbelievable hyperinflation numbers. This is the second time in the democratic country's history, in the Republic of Zimbabwe's history, that this is happening. So obviously they've gone through this before. Maybe similar mistakes have been made. What then needs to be done now?
The major thing really would be one, you need to get your economy back on track. Whatever needs to happen, if the economy is running well, you would have people have a lot more confidence in the country, and then their own currency would start to have value once again. Then the second thing would be to allow people transact using their phones, for instance, right? So we have electronic trading, buying things online. However, the challenge people have, or the fear, is that government always ends up imposing all sorts of restrictions. So people rather put their cash at home. So government needs to stop that. Let people hold whatever it is that they're holding. Stop trying to implement all sorts of currency restrictions, which makes people take their funds on the ground and helps, continue with this vicious cycle. So sort out your currency, or sort out your economy rather, and then let people trade freely, stop various currency restrictions have not made things better, they've only made them worse.
All right. Thank you so much, Nnamdi Nwizu, for joining us on Business Edge. He's the co-managing partner, executive director, and head of trading at Comercio Partners Limited. We look forward to having you back.
Thank you. My pleasure.
All right. Fantastic. And just to add, as we wrap up on this Zimbabwe story, coming in, it's interesting that the U.S. Embassy has actually tweeted that they will, how would I put this? All dollar notes will remain valid for transactions. And they said this in a statement on the U.S. Embassy Twitter handle that said damaged notes, as long as they were more than half of the bill and with recognizable security features, remain legal tender. So they said any badly soiled, dirty, defaced, disintegrated, limp, torn, or worn out currency note that is clearly more than one half of the original note and does not require special examination to determine its value is not considered mutilated. So I think that's something that many Zimbabweans will see and breathe a sigh of relief. All right, we are wrapping things up and we get straight to NC4 to watch, and those are a few stories we're keeping our eyes on. We start, of course, with Zimbabwe, interestingly enough, and Zimbabwe's sole ammonium nitrate fertilizer producer, Sable Chemicals, has managed to scale up production to ensure adequate product supply after assessing $2.9 million from the foreign currency auction trading system. We head now to South Africa, where credit rating agencies Moody's and S&P Global are due to review, or rather release, their rating reviews on Friday, the 20th of November for South Africa. All indications are pointing to the possibility of another downgrade. A new credit information sharing mechanism by the Kenya Association of Manufacturers and the Association of Kenya Suppliers will, among others, allow suppliers to blacklist retailers who default on payments. Numerous suppliers have been driven to financial ruin thanks to non-payment for deliveries, with major retailers a common culprit. And finally, East African countries amass over $73 billion in external debt. The International Debt Statistics 2021 report by the World Bank says countries in this region over a decade increased external borrowing by nearly 4 times. And let's quickly get to some of those. Kenya was the biggest borrower, increasing from $8.5 billion to $34.2 billion. Followed by Tanzania, which increased from $7.6 billion to $19.5 billion. And then you also have Uganda and Rwanda. Uganda was $13.9 billion to moving up. And of course, we have Uganda and Rwanda accumulating $13.9 billion and $6.2 billion in external debt over the past decade. And that's it on Business Edge. Head to our website, follow us on social media for more business and financial stories coming to you from across the continent. And until next time, I'm Tolulope, Adeleru, Balogun. Have a profitable day.